The Nevada housing market is facing one of the toughest moments in recent history. For years, this state was considered a haven for affordable homes, especially compared to neighboring California. But in 2026, that story has changed. Prices have surged, rents are climbing higher than ever, and families are being pushed out of the very neighborhoods they once called home. One of the biggest drivers of this crisis is demand. Nevada has seen a massive wave of migration from California, Arizona, and other high-cost states. People move here looking for a better deal, but that flood of demand has sent home values skyrocketing. What was once affordable in Reno, Las Vegas, or even small towns like Henderson is now out of reach for many locals. At the same time, Wall Street investors have been quietly buying up properties. Firms like Blackstone and Invitation Homes see Nevada as prime real estate. They scoop up single-family homes in bulk, turn them into rentals, and lock ordinary families out of the chance to buy. This corporate takeover shifts the balance of power. Homes stop being places to live and instead become assets to be traded. But the story doesn't end there. Nevada's housing crisis is worsened by limited supply. New construction has slowed down due to high material costs, labor shortages, and strict zoning laws. The state simply can't build enough homes fast enough to meet the overwhelming demand. That shortage is squeezing the market and driving costs even higher. Meanwhile, renters are carrying the heaviest burden. In Las Vegas alone, rents have jumped more than 40% in just 5 years. Families are paying half their income just to keep a roof over their heads. Many are being forced into smaller units, longer commutes, or even moving out of state altogether. So, where does this end? If Nevada doesn't take bold steps, like expanding affordable housing, regulating investor buyouts, and boosting new development, the crisis will only deepen. The dream of owning a home in Nevada is slipping away, and 2026 may mark the year the state officially loses its reputation as affordable. Nevada's housing market has been booming for years, but in 2026, cracks are starting to show. Beneath the rising home values and constant headlines about growth, there are dangerous warning signs that point to a potential collapse. The first red flag is affordability. Home prices in Nevada have risen far faster than wages. In Las Vegas, the median home price is nearly 6 times the average household income. That imbalance makes it harder for new buyers to enter the market, and eventually, demand will hit a ceiling. When families can't afford to buy, the market stalls, and history tells us that stalled demand is often followed by falling prices. The second factor is investor dominance. Wall Street-backed companies and large private equity groups have bought thousands of homes across Nevada. They pay cash, outbid regular buyers, and rent the properties out at premium rates. While this has been profitable for investors, it creates an unstable market. If those firms decide to sell in bulk or raise rents too quickly, they could trigger a wave of financial stress for local communities. Another issue is Nevada's dependence on tourism and entertainment. The economy is heavily tied to jobs in Las Vegas casinos, hotels, and service industries. During downturns, like the 2008 recession or the pandemic, Nevada was one of the hardest-hit states in terms of housing. If the economy weakens again, the housing market could collapse faster here than in other parts of the country. Rising interest rates also add pressure. In 2026, mortgage costs remain high compared to just a few years ago. That extra expense prices out first-time buyers and puts downward pressure on demand. Combine this with record household debt, and the risk becomes clear. Nevada's housing bubble could burst if conditions line up the wrong way. What would a collapse look like? Falling home values, rising foreclosures, and investors pulling out, leaving neighborhoods full of empty homes. We've seen this before in Nevada during the 2008 housing crash. The question now is whether 2026 will be a repeat. If state leaders don't act to improve affordability and regulate investor influence, Nevada's housing market could face a painful correction in the near future. On the surface, Nevada's housing market looks strong in 2026. Home prices remain high, demand seems steady, and investors continue to pour money into the state. But beneath that surface lies a hidden bubble, one that could burst sooner than most people expect. One of the clearest signs of a bubble is the disconnect between prices and real wages. In Nevada, the average home price has grown by nearly 60% over the past 5 years, while incomes have only crept up by 15%. That gap creates artificial growth. Homes are becoming more expensive not because families are earning more, but because outside money is driving values upward. This is classic bubble behavior. Another warning sign is speculation. Investors are betting big on Nevada real estate, particularly in Las Vegas and Reno. Many are buying properties with the expectation that prices will keep climbing year after year. But housing markets don't rise forever. Once growth slows, those speculative purchases can flip into panic selling, sending prices into a tailspin. The rental market adds more pressure. Rents in Nevada are at record highs in 2026, with many families paying 40 to 50% of their income just to stay housed. When rents climb that high, it squeezes consumer spending, weakens local economies, and creates instability. If tenants begin defaulting or moving away, landlords, especially corporate owners, may find themselves holding properties that generate less income than expected. There's also the issue of rising costs. Insurance premiums in Nevada are increasing, construction materials remain expensive, and mortgage rates are still higher than the pre-pandemic years. All of these costs chip away at affordability, pushing more residents to the edge. If these warning signs sound familiar, it's because Nevada has been here before. In 2008, Las Vegas was ground zero for the housing crash. Thousands of homes went into foreclosure, entire neighborhoods were abandoned, and property values plummeted. Many analysts now fear that 2026 could follow a similar path. Nevada's hidden housing bubble isn't about whether prices will drop. It's about when and how hard. Unless policymakers address affordability, regulate investor dominance, and stabilize supply, the bubble could burst, leaving Nevada families once again paying the price. The Nevada housing market in 2026 is a story of extremes. On one hand, the state continues to attract new residents seeking lower costs compared to California or Arizona. On the other, longtime locals are finding it harder than ever to afford a place to live. To understand the crisis, we need to break it down into 3 parts: prices, demand, and supply. First, prices. Over the last 5 years, Nevada home prices have climbed nearly 60%. In Las Vegas, the median home now costs more than $500,000. For a state once known for affordable housing, this shift is massive. While investors see rising prices as a sign of strength, families view them as a barrier. The average Nevadan simply doesn't earn enough to compete. Second, demand. Nevada's population continues to grow as people escape higher costs in neighboring states. Californians, in particular, are moving into Reno and Las Vegas at a record pace. Their higher incomes give them an advantage in bidding wars, which pushes prices even further beyond the reach of local buyers. Add in out-of-state investors who scoop up homes as rental properties, and demand consistently outpaces what the state can supply. That brings us to supply. Nevada is struggling to build enough housing. Construction has slowed due to labor shortages, high material costs, and restrictive zoning laws. Affordable housing projects are often delayed or canceled altogether. This imbalance, too much demand and not enough supply, is the core reason why Nevada's market feels so broken. The rental market paints an equally grim picture. Average rents in Las Vegas and Reno have jumped by more than 40% since 2020. Families are paying thousands each month, often for smaller apartments or older homes. For many, the dream of homeownership has been replaced by the fear of endless renting. So what does all this mean? The Nevada housing market in 2026 is unsustainable. Unless bold action is taken to increase supply, regulate investor activity, and stabilize rental costs, the state risks falling into another housing crash. Nevada has been here before, and if history repeats itself, the consequences will be severe. In 2026, Nevada families are facing one of the harshest rental markets in the country. What was once a state known for affordable living has now become a place where rent eats up nearly half of a family's income. The dream of a simple, stable life in Nevada is slipping away. In Las Vegas, average rents have climbed past $1,900 a month, a record high. In Reno, renters are paying nearly as much, with some neighborhoods rivaling California prices. These increases are not slowing down. In fact, over the past 5 years, rents in Nevada have risen more than 40%. For many families, paychecks simply cannot keep up. Why are rents rising so fast? The answer lies in a mix of limited supply and corporate control. Nevada hasn't built enough affordable housing to keep up with its rapid population growth. At the same time, Wall Street-backed investors are buying homes and turning them into rentals, cutting off families from ownership and locking them into a cycle of high rent. For working-class Nevadans, the impact is devastating. Teachers, service workers, and casino employees are spending half their income just to cover rent. That leaves little left over for savings, healthcare, or education. Families are being forced into smaller units, longer commutes, or even out of state entirely. The situation is especially harsh for young adults and first-time renters. Many are stuck living with parents or cramming into shared apartments. The idea of renting a one-bedroom place alone has become nearly impossible for single workers. Even retirees, who once saw Nevada as a low-cost destination, are now feeling the pressure. Fixed incomes can't stretch far enough to handle climbing rents and rising insurance costs. Experts warn that if rents continue to rise unchecked, Nevada could face a social crisis. Families will leave, homelessness will increase, and the workforce that keeps the economy running may not be able to afford to stay. The housing problem in Nevada is no longer about just owning a home. It's about survival in a rental market that shows no mercy. And unless leaders take action to expand supply and rein in investor dominance, 2026 may be remembered as the year Nevada renters hit their breaking point. For years, Nevada was sold as a land of opportunity, a place where ordinary families could find affordable homes, cheaper than California, and still enjoy a decent quality of life. But in 2026, the truth is harsh. Affordable housing in Nevada has all but disappeared. The numbers tell the story. In Las Vegas, the median home price has crossed $500,000. In Reno, it's even higher. Compare that to the average household income, and it's clear why families are struggling. A home that once cost 3 times a family's income now costs 6 or 7 times as much. The affordability gap has never been wider. So where are the affordable homes people keep hearing about? The answer: they don't really exist anymore. The few properties that are listed at lower prices are often mobile homes, fixer-uppers in poor condition, or houses located far outside major job centers. Families who buy them face long commutes, high maintenance costs, or unsafe living conditions. Meanwhile, corporate investors are snatching up mid-range properties. What used to be the sweet spot for middle-class buyers is now dominated by Wall Street firms who rent them back to families at inflated rates. The result is a market where locals are priced out of both buying and renting. For younger Nevadans, this reality is even harsher. First-time buyers face impossible down payments and soaring mortgage costs. Many are giving up on ownership altogether, trapped in a rental cycle with no escape. The so-called affordable home is now just a marketing slogan, not a reality. Even government programs meant to help, like first-time buyer assistance or affordable housing initiatives, can't keep up. Demand far outstrips supply, and applications overwhelm the limited resources available. The harsh truth is this: Nevada is no longer an affordable housing state. Without aggressive action, such as curbing investor dominance, reforming zoning, and incentivizing real development, the dream of affordable homes in Nevada will remain exactly that: a dream. 2026 may be remembered as the year when Nevada's reputation for affordability finally ended, leaving ordinary families to face a housing market designed not for them, but for those with deeper pockets.